What's up, everybody? It's your boy Kid Crypto, and I'm back. I know it's been a little while since I made my last video, but I always like to knowledge drop when it's most important, right? So I hope all of y'all are having a great April, but we got some important topics to cover here, some very important dates coming up. So we want to dive into all of that. Looking at the agenda, first things first is we're going to piggyback off the last video. I was talking about the Federal Reserve and all of this stuff, so I want to slow that down and do a higher market overview for y'all. And then we're going to close on just taking a really quick peek at XRP's chart and closing with an important date, a couple important dates, sorry, that you want to keep on your radar, right? So starting with item one here, the market overview. Okay, when we were talking in the last video, I was going crazy fast and not thinking of what if somebody came in to crypto and has no idea of a market, no idea what the Federal Reserve is, how important they are, what they do, how this pertains to crypto or anything, right? And I'm going to show you how just understanding this concept will help you understand that some of the stuff they put out in the news really might be clickbait and noise. And they're telling us with the writing on the wall in these Federal Reserve and et cetera, what they're exactly going to do. Meanwhile, in between, they create some noise. I think a famous investor out there told us, hey, block out the noise. Anyway, uh, so when we think of the Federal Reserve, okay, we're going to think of the Fed as like the economy's, US economy's thermostat. And what they do is they look at specific data, and if it's too hot, they adjust to bring it back down. And if it's too cold, they adjust to actually heat the markets back up. So, thinking of that, those data points, right? We were talking about them in the last video. I'm going to slow those down a little bit. You got the first one, CPI. This is a huge one, right? Consumer Price Index. Many of us have talked about gas and groceries, right? Oh, they're rising, they're crazy. Oh, gas is this. I remember going to my hockey games as a young kid and we were getting like 60-cent gas. Um, anyway, this CPI data point is going to show how fast prices for things like that, groceries and gas, are rising. So, thinking of that thermostat, if it's too high, too hot, everything's heating up. That's bad. Things are inflated. Okay, which leads to that second data point that we were talking about, and that was personal consumption expenditures, PCE, which their data point just dropped, released an update. And what PCE is tying in with CPI is literally just tracking what people actually spend money on. So it's just a broader economy check, like, hey, what's going on? What are they actually spending their money on, right? And then the final one, and we're not going to dive too crazy into this, it's the most boring, jobs data. And this is literally telling you are people working or struggling. And if there's too many, like for example, if there's too many jobs, right, it could overheat the economy. And if there's too little, it could freeze it. So tying all of those together, they take, all three into account and they determine, okay, do we adjust to bring the markets back down, or do we adjust to start to heat the markets back up to go for a nice bull run, or whatever, to make let the markets go to run. Um, so we're going to look at that back all the way to 2021 to forward, and why that's very important, because many of y'all remember this run up over here. I mean, we're looking at Bitcoin, and a lot of cryptos, including altcoins, all had astronomical runs back then. Okay. Many of us are still living off that juice. Shout out OGs, let's go. But looking at this, then we had this crazy opportunity where you could get, imagine if you bought Bitcoin at 16, 17,000. It's 93K right now. But you could have, if you followed me, baby, let's go. No, you could have, actually knowing this knowledge that I'm going to tap you into here. We're going to go a little bit slower, don't worry. So the feds, right? They publish their meetings that they have throughout the year. They meet every couple months, and they put their meetings out, their minutes in a PDF. And so the most important months are March, June, September, and December. And don't worry, all these links, everything I'm going to put down in my bio for you. So don't go around trying to be, oh, what did he click? What did he do? I'm going to put all that in the description for you. I'm going to make y'all's lives easier. I promise you, each video is going to get a little better. Shout out Jimmy. Thank you for taking the time to really give that feedback. Love you, friend. And so, anyway, don't worry about the links and stuff, friends. Going back to it, right? So you have the markets and you have the Feds. They publish these minutes, and on their website they tell you what months they do what they call economic projections. These are, hey, we're going to read those data points and we're going to see if that economy's thermostat is running still too hot or too cold. What is going on? Do we need to adjust? Do we not? Okay. So going back here to the Federal Reserve's website. Okay. Again, links will be below. This is from March of 2021. All right. They go through, and I'm going to go to the most important part. The Federal Reserves, they always use this interesting introduction. In addition, and we'll see that a year later, and literally pretty much every year. In addition, they tell you exactly what they're going to do. So March of 2021, they said, hey, all this up here, all this gibberish says, hey, stuff's still looking good. So we're going to continue to increase our holdings of treasury securities by at least X amount a month. And what they're basically telling you is, hey, we're money printing and injecting it into the economy. Okay. We're heating up the economy because it was too cool. Well, how do we look at that? How do we even know it? Oh, how can we trust that, right? So, well, one, look at Bitcoin. Okay, February, all the way up through they're buying. Now they did a crypto summer here again. That's just something different. You can have your reasoning why there was a sell-off here, and I personally would advise you to go look at some more data. There's a lot that's into this, but this right here again we'll get into here in a second. So they tell us, hey, we're buying, we're bullish, we're buying. Okay, what's next? Right? Well, if you look at CPI, okay, during that time, and again, I'll put these links below. Okay, CPI, again, CPI is showing how fast prices for things are rising, was very low prior to them heating up. Okay, you can see what it was. Okay, so very low. The pandemic hit, they let it run, and you can see when they turned it on and they start increasing, they even let it run as high as 9.8. That's crazy. So they tell us, hey, let's be bullish. It's time. Fast forward a year later, March 2022, they tell us something different. In addition, the committee expects to begin reducing its holdings of Treasury securities at a coming meeting. Okay, so they're not even telling you which meeting. They're just saying, hey, we're going to begin reducing in one of our upcoming meetings. Well, if that's March, that June, was September, December. Okay, so again, I'll put these links below for you, and you can see the little asterisks when you come to these, by the way. That's what I was talking about. Um, so this is 2022. In addition, the committee will continue reducing its holdings. And you're like, well, when did they begin? And so what they decided was, if you go one back, you're like, okay, well, how'd that happen? How'd that happen? In addition, the committee decided to begin reducing its holdings on June 1st on its economic projections month. Go figure. So they tell us that, and look what happens in 2022. Where you could have got Bitcoin for 15 grand. Imagine that. Just following Kid Crypto. That's all. No, taking that into perspective, right? The Federal Reserve saw what we all can see. The economy was hot, very hot, way too hot. So they've been raising rates, not recently, but they've raised the rates over that course of time to bring it back down to this, the 2.9, 2.4, all of these. Got a little high. That's normal. It's seasonal. I mean, they even tell you in the Federal Reserve's, hey, that's all seasonal. We expect that, blah blah blah. But again, I pointed this out before. Fast forward to March. So we looked at March in 2021, 2022. Now you fast forward from 2021 to now, 4 years later. Okay, 4 years. You guys want to see? Continue reducing. Blah, blah, blah. Now it's funny because a lot of you are like, well, where's the in addition? Yeah, they gotta maybe they use Chat GPT. I don't know. So they're like, hey, some Kid Crypto's catching on. The committee will continue reducing its holdings, but beginning in April, the committee will slow the pace. Okay, the reason why that's important is they're now saying, hey, things are starting to actually cool off. That thermostat's actually not overheating. We don't have a fever anymore. So with no fever, things are coming down. Okay. Now its goal is that to be at 2%. We're at 2.2. Huh. Take your pick. Right now, there's still a 91.7% chance. Again, I'll put this for no change. We're not going to get a rate cut. Again, I even mentioned that in my last video. Retail, everybody was like, yes, we're going to get it in, this. Now, that does not mean I'm predicting the future. It's just my opinion. They easily can come out this next month, uh, which we'll get into here in a second, and say, hey, we're going to cut rates. Trump could be pressuring them, but if he's not and we don't get the rate cut, hey, that's just the way it goes, right? We take it step by step. But that also makes me believe that these peaks and valleys and lows and everything are not done yet. That's just my opinion, but we'll see. um, so wrapping that all up, again, the Federal Reserve, this Illuminati group of people, the Fed is the economy's thermostat. Too hot, they adjust to bring it back down. Too cool, they inject a bunch of money. The money printers going burr. They turned it on. They're making the markets run up so that they can unfreeze it. Okay. So there you go. There are different data points. Again, I'll put all of those down below if you want to nerd out on them and take this even further. Um, so I did promise we'll peek at XRP. Just looking at XRP, you know, take your pick. You can kind of see here what happened here. Longs and shorts got stomped out. OI went down, right? Open interest, that just is the amount of money that's coming in on positions. So contracts being opened. So I mean, I think there's still another rotation down, but we'll dive into that in a different video. We'll nerd out on that, right? I want to start breaking down things like time, price, opportunity, and value area, high value area, low, all that stuff that will really hurt your head in getting confused. So anyway, again, this is not financial advice, any of that crap. This is just me bringing y'all to some good information. Go out there, take the links that I put in my bio, run with them, go nerd out and compare. I mean, they told us, hey, and I'll take it one step further. Okay, I want to show you this really quick. I pointed this out in my last video. This was still the most important one that they gave us in January of 2022. Okay, so the committee, they came through, and beginning February, the committee will increase this in the Federal Reserve, blah blah blah. Okay, so they decided to reduce the monthly pace of its. Sorry, that's what I was trying to find. So if you remember the one that we just read for March of this year, 2025, they are going to reduce the pace at which they're selling. Uh-oh, they're no longer bearish. Uh-oh. This one here, the community decided to reduce its monthly pace of asset purchases. So, uh-oh, they're no longer bullish then. Okay, fast forward to current day. Uh-oh, they're slowing the pace of the selling. Uh-oh, hint, hint, do what you want with it. So now I promised you some important dates, right? So first important date to mark on your calendar, FOMC meeting. Okay, again, I'll put this link below. It is coming up here very fast, May 6th and 7th. They might tell us if they're going to give us that rate cut. If they say no, then expect volatility through these months. Seriously, there will be a lot of volatility through May, June, July. As we get closer to this one, we might see some stability as we expect maybe rate cuts by then if we didn't get it here. Okay. Or, whenever. So, uh, that's the first date. So stay tuned. Maybe we'll do a live stream or something. Let me know if y'all want to. Final thing is, I just want to touch base on this on the SEC website, Crypto Task Force Roundtable. That is tomorrow at 1. You can click on it. I'll put this link below. But y'all should come check out some of the panelists for this. There's some huge panelists. Okay. Really cool. I mean, shout out to where is he? Mark. He's the head of. You can see VP, global head of consumer at Kraken. Love Kraken. Shout out Kraken. But yeah, go through this, check this out. I'll put the link below. Very important. I think they even make it. Let me see here. Yeah, you can actually tune in, so that's even better. So go check this out. Um, until next time, y'all. Kid Crypto just bringing y'all to some important information. Let's go.